Hi, this is Dr. Trader. This week, gold did something history does not usually script. The US-Iran conflict escalated, and oil surged above $90 a barrel. Normally, that kind of geopolitical shock sends money into gold as a safe haven. Instead, gold broke below $4,000. The market treated the oil spike as an inflation problem, not a safety problem, and priced in a more hawkish Fed. The result? Gold is on track for its biggest weekly loss in 6 weeks. NEXUS still maintains a bullish bias, but conviction remains low. Here's what happened. US-Iran tensions escalated sharply this week, and Brent crude surged. That should have been bullish for gold as a safe haven. It was not. Instead, traders treated the oil spike as an inflation signal and began pricing in a higher for longer Fed. Gold sold off and closed at $3,992.20. That was a weekly close below the $4,000 level, not just an intraday dip. There was one genuine piece of good news. Core CPI came in at 0.0% month-on-month, well below the 0.2% forecast. It was a clearly dovish surprise. But the softer CPI reading was completely overshadowed by the oil-driven inflation and rate hike narrative. Here is the part that matters most. The macro case for gold is still intact. The softer CPI reading is dovish. The US dollar index still carries a bearish bias. COT positioning also leans bullish. But none of that is showing up in price. Why? Because the US 10-year real yield is around 2.35%. That is an elevated level, and it increases the opportunity cost of holding an asset that pays no yield. On top of that, every time frame tracked by NEXUS is bearish right now. There is no divergence and no early sign of exhaustion. So, a bullish macro story is running directly into an all-bearish technical structure. That conflict is exactly why conviction is low, even though the broader bias remains bullish. The weekly VWAP is at $4,037.87. Gold closed at $3,992.20, around $45 below that level. Under the NEXUS framework, a close below the weekly VWAP is a short-term momentum signal against the bullish thesis. That means position size should be reduced. The weekly TrendSL is at $4,522.20, more than $500 above the current price. TrendSL is not a trade stop loss, and it is not a near-term target. It is the long-term trend confirmation threshold used by the NEXUS system. Multi-time frame alignment remains fully bearish. No time frame in the stack is currently producing a bullish signal. NEXUS keeps the overall bias for gold at bullish this week, but conviction is low. This is not a clean buy signal. The bullish case rests on softer inflation data, a weaker dollar outlook, and continued central bank demand. Those are real pillars, but they are not enough on their own. The thesis is being actively contradicted by an all-bearish technical structure and elevated real yields. When the fundamental story and price action disagree this clearly, low conviction is the honest conclusion, not a hedge. Position size should reflect how fragile the thesis currently is. 2 levels matter most heading into next week. First, gold needs to recover above the weekly VWAP at $4,037.87. That is the minimum requirement before the near-term bullish case becomes credible again. Second, watch the weekly TrendSL at $4,522.20. This is a long-term trend confirmation threshold within the NEXUS system, not a near-term trade trigger. On the calendar, watch for further Fed commentary after the softer CPI reading, fresh PCE, and inflation data, and any escalation or de-escalation in the US-Iran conflict. Also, watch for updated World Gold Council demand data. Central bank buying remains one of the main pillars supporting the broader bullish case. If oil stays elevated and Fed officials remain hawkish, gold could extend its losses. If geopolitical tensions ease and softer inflation begins to appear across more data, that could open the door for a move back above $4,000. For now, gold remains a low-conviction bullish thesis, trading below its key short-term technical level in a market shaped by war-driven inflation fears rather than the usual safe haven playbook. Thanks for watching this week's Market Outlook. This analysis was produced using the NEXUS research engine at Intermarket Edge. Subscribe for weekly macro and intermarket research powered by NEXUS. This content is for informational and educational purposes only. It is not investment advice.